Hi, and welcome to BullionMax. I'm Mark Allen. My co-host is Sean Reynolds. He is the customer service manager for BullionMax, and we're going to be joined today by John Rubino. John is the author of 5 books on the economy and investing. His latest is The Money Bubble. He's also the publisher of the very popular newsletter, dollarcollapse.com. John, welcome to BullionMax.
Great to be here, guys. Thanks.
Let's briefly take a look at your history. I mean, you're an author, and you're continuing to write. Tell us your backstory, your background.
I'll give you the really short version because the long one is very long, but I've been kind of sort of involved in financial bubbles my whole life. I started out on Wall Street during the junk bond bubble, and then was a writer during the tech stock bubble. And, I've just continued writing about the financial markets through all the stuff that's come since then. And now here we are in the everything bubble. So it's been a, kind of a surprising life, but one with a very clear trajectory from one bubble to the next.
Do you think that these bubbles are going to pop all over the place? Inflation, real estate, the stock market, all of these as bubbles go pop, 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 pop.
Oh, absolutely. Bubbles pop. That's what they do. And when you reach a point where there's so much debt in a given system and prices are so high relative to intrinsic value, it doesn't just slowly inflate and over a period of years go back to normal. It just, boom, in the space of a few months goes back to normal in a hurry. And that's the popping of a bubble. The question is not whether these bubbles are going to pop, but whether when they pop, they end the fiat currency fractional reserve banking system. In other words, the experiment that we started in 1971 when we went off the gold standard, whether that will end with the bursting of the everything bubble. And I kind of think it will. I think there's a phenomenally huge phase change coming in our financial lives. And over the next couple of years, it'll arrive, and everything that we think is normal today will change completely.
Right now, real estate is just out of sight. I know that here in Southern California, where I am, and I've talked to friends up in Washington State, Oregon, all across the country, real estate prices are astronomical. Is that going to be, and Sean is in Oklahoma. Is that true in Oklahoma as well?
Same thing. I mean, you almost can't sell your house because you can't buy another one for anything you can afford. So it's amazing. You have inventory levels at their lowest point. There really aren't houses to buy. And if you are looking, chances are you can have a bid on a home that's far higher than its actual value and still not get that house.
Yeah,
It's crazy here.
it is. Is it crazy in Washington like that too?
It's crazy everywhere now. Yeah, real estate is one of the bubbles, one of the many bubbles that are out there right now. And it's almost as bad now as it was back in the previous real estate bubble of 2006, 2007. Prices are higher than they've ever been. Homeowners are more indebted than they've ever been, other than the peak of the 2006 cycle. So yeah, it's going to burst. And we see we see how it's going to happen now too, because interest rates are starting to go up because of rising inflation, which is making mortgages way more expensive, which is taking, these houses that might have been affordable when you could get a 2.5% 30-year fixed rate mortgage. Now you got to pay 5% on that mortgage, which makes the house completely unaffordable, which means fewer and fewer people can buy houses, which means the prices will start to tank pretty soon. So that bubble is clearly on the verge of bursting right now. But yeah, for anybody who needs a house right away, it's a nightmare. Well, by the way, here's how you deal with that.
Sure.
You sell your house, you book that massive profit, and then you buy yourself a van and you travel around the country from like national park to national park for the next 2 years. Then you go back and buy your dream house for 35% off or whatever when the bubble has burst. So that's how you play this.
Is that what you're going to do? Or?
I'm stuck where I am.
Yeah, I am too.
Yeah.
You know, I kind of like that idea. I'm gonna have to talk with the wife after we have this conversation and kind of share that, plant that seed, and see what happens.
Yeah.
Good luck. I hope it works
Yeah,
out.
yeah, it's a great idea, except that she's going to want to drive, and I'm going to want to drive, and so nobody will end up driving. But
Well,
talking
maybe you
about
need two vans. Make
yes,
it a caravan trip.
yeah,
There you go.
we could do that.
As long as you let me lead, okay.
Mm.
How does precious metals figure into this? I mean, uh, instead of buying a house, should we be investing in precious metals, gold, silver, platinum, etc.?
Well, gold and silver in particular are the old forms of money that humanity has basically used as a medium of exchange and store of value since before the Roman Empire. You know, it goes back maybe 3,000 years, and it's worked beautifully all of that time. Now, in 1971, we broke the final link between the world's currencies and gold and silver. In other words, we stopped backing our currencies with precious metals because governments wanted more freedom to be able to borrow more and spend more and fight more wars and basically buy votes in every election, yada, yada. And so since that time, governments have had pretty much an unlimited credit card with which to do whatever they wanted. And of course, you know, being what they are, politicians, they've abused that privilege. And we've brought ourselves to a point where there's so much debt in the system, so much leverage, so much extraneous currencies flopping around out there in the world that we're basically destroying the value of the dollar and the euro and the yen and the other paper currencies. Now, this has happened many times in human history, and every single time the people in the country where the currencies was being destroyed would go back to the old forms of money that they know they can count on. You know, gold and silver have limited supplies. They're very durable, and because of that, they tend to hold their value. Since you can't increase the supply of gold other than by digging it out of the ground, and that's really hard. Their supply remains stable, their value remains stable, and when the currency of your country is collapsing around you, that's a really good idea. You know, it's a really good characteristic. So people pile into gold and silver. Now, if we're making the same mistakes that led to the collapse of dozens, if not hundreds of currencies in the past, right now, then it's reasonable to expect people to pile into precious metals as a way to hide out from the chaos that's going on all around them, which means gold and silver are wildly undervalued. And when the time comes that everybody tries to get through that tiny little door to get to gold and silver, and they find they can't do it, the prices will just go up astronomically. We'll have that parabolic run where they just go straight up for a while. So that's what gold and silver do. They protect you against currency crises and government stupidity in general. And at the the very peak of the cycle, when everybody's terrified and trying to get in, they also make you a lot of money. You know, they can make you some massive capital gains, although that's not really their job. Their job is to preserve purchasing power. But we're coming into that time when you can also get rich in gold and silver. So it's a very interesting time for precious metals, and one that should become obvious in the not too distant future.
You mentioned supply. Is there enough supply for the demand?
Well, yeah, because it's not the supply that adjusts in this kind of a market, it's the price. So there's nowhere near enough gold at $2,000 an ounce, but there will be plenty of gold when it's $10,000 an ounce. In other words, you could back the dollar with gold in a way that that we used to do. For instance, back during the classical gold standard, which ran for 200 years up to 1914. If we backed 40% of the dollars outstanding with gold, we would probably have to do a $10,000 price for gold. In other words, we would say that the dollar is just another name for 1/10,000th of an ounce of gold, which means your gold that you buy for $1,900 now gets much more valuable as this process plays out.
And you're preserving the purchasing power of your capital.
Yeah, you put some money into gold right now, and you can be reasonably sure that you'll be able to buy the same amount of stuff 10 years, 20 years, 50 years from now. So that's what's been true for 3,000 years. During the days of the Roman Empire, an ounce of gold would buy a nice man's toga plus sandals. And today, an ounce of gold will buy you a good man's suit plus a pair of shoes, and it's the same with all of the other necessities of life: oil, wheat, whatever. Gold has preserved purchasing power throughout natural disasters and wars and revolutions and every kind of stupidity that life can throw at the financial system. Gold has held its value in terms of the stuff you can buy with it. So there's no reason to think that it won't hold its value over the next 10 years, and which is basically our investing time frame for most people. Although, a lot of people buy gold as a generational wealth vehicle. In other words, you don't intend to ever spend it. You're just going to have it be what your kids inherit, and have it be what their kids inherit. You've got this one bedrock asset in your family that stays valuable for decades, if not centuries. So yeah, it's a thing everybody should own for that reason, but more so now than usual because we're heading into a really chaotic stretch.
This is BullionMax. I'm Mark Allen, along with Sean Reynolds, the customer service manager at BullionMax. Sean, if people are interested in starting to collect gold, invest gold, BullionMax can help. Tell us how.
Well, it really starts with helping people by listening to what their goals are and what it is they want to do. What level of investing do they want to do? How much can they afford? And from there, we show them products that will help them meet those goals. We don't really push anything on them. We just let them, we get them educated so they're able to make their own decisions on what is best for them, their family, their investing. And we've got, gold to fit every budget, so to speak. Not that I'd recommend you buy it a gram at a time. It's maybe not the best way for long-term investing, not a great value, but it has its place. But certainly, we're talking with a lot of folks who are looking at getting into metals now, and I couldn't agree more with John that this is a time to get in. If people have not started yet, start now. This is a period of chaos that's creating something in metals that John also pointed out. It's normally to secure your assets and make sure your dollars stay dollars. You're not normally looking at market gain from precious metals, but we certainly will be in a way that we've never seen it before. So whatever the level is that people can afford to get into the game, we can help people with that. If
And of
it's
course,
an ounce at a time or a quarter ounce or whatever.
and of course, BullionMax can help people who are just thinking about starting at this point as well, right?
Yeah, and that's that educational piece. I mean, usually what prevents people from getting started is not knowing what to do. Or how does this work? Or what's going on? Or if I buy it, then what? What if I need to cash out? Do you buy it back? What would I do? What if we're bartering? Okay, well, nobody knows anything about that
Right.
stuff yet. That's all speculation. But you're right. There are a lot of people we speak with, and we're happy to talk to them who are not ready to buy. It's fine. You don't have to make a purchase today to talk to us at BullionMax. We're here to
Got it.
help.
Got it.
We really want to make sure people feel good about getting started and actually starting. That's the toughest part, is that actual starting. You talk about it all day, but until you do it, then you're in. Then you're not going to be, forced through that door John's talking about when everybody's trying to do it at the same time. That's going to be a little too late. And this is why we like talking about this now.
Our guest is John Rubino. He's the author of 5 books on the economy and investing. His latest book is The Money Bubble, and we've been talking about all those potential bubbles that are going to pop. He's also the publisher of the very popular dollarcollapse.com website and has lots of insight there. And we invite you to go and visit John at dollarcollapse.com. John, are there people mining silver today? Are there miners looking for gold? I mean, you know, the picture behind you, you've got a stream, and I can picture you out there in your backyard with a pan
Panning
looking for
away.
gold nuggets. Yeah, exactly.
I'm too lazy for something like that, but there are actual gold miners and silver miners out there who do it for a living and do it well. And you know, it's a very vibrant industry. One of the adjuncts to buying gold and silver is the gold and silver miner stocks, because they go up even more in good times than gold and silver themselves. So that should be part of a diversified investment plan. You know, you want gold and silver physical under your own control. And then maybe you want to branch out into the gold and silver miners as riskier, but potentially more lucrative parts of the story. But yeah, the gold mining industry and the silver mining industry, they're both very vibrant. They're both out there looking for gold and silver, but it's getting harder and harder because the easy stuff has already been found. So the average grade, in other words, how many ounces of silver or gold are in the rock that they're digging up, has been falling for decades. And the amount of gold and silver that the big gold miners are actually producing is either flat or declining a bit, depending on the producers. They're not making that much more. And because of that, you know that the amount of gold and silver in the system is going to be limited going forward, and that rarity preserves the value of gold and silver. And you know, silver is actually an even more interesting story when you look at it from that perspective, because it is it's an industrial metal, which is
Right.
used in a lot of modern technology, as well as being a monetary metal.
I mean, I'm sure it's in our I know gold is in there, silver is in our smartphones and a lot of electronics. It's being used in all kinds of industries.
Solar panels. You know,
So
we're only going to be making more of those in the future, not less. So
Right.
the industrial uses of silver are continuing to increase.
yeah, we've made a political decision to move to alternative energy sources. So electric cars and solar panels are going to be growth industries almost no matter what else happens in the world, because
Mm-hmm.
it's a political as well as a financial decision that we as humans living on Earth right now have made. Every electric car has some silver in it. Every solar panel has some silver in it. Along with all the other industrial uses and monetary investment uses. And there's not enough silver to satisfy the number of solar panels and cars we intend to put on the road or on rooftops in the next 20 or 30 years. So it's an interesting dilemma for not just silver, but copper, nickel, zinc, but also definitely silver, where we're going to do this stuff, but we don't currently have the metal with which to do it. So we have to go out there and find it, which means we have to open new mines that maybe weren't economic to be opened before,
Mm-hmm.
which means we need higher prices for those metals to justify opening these new
Mm-hmm.
gold, these silver mines. So silver kind of has to go up just from an industrial standpoint, but the monetary standpoint is out there too, where once we start screwing up our currencies, people pile into gold and silver, which will soak up all the extra silver that's out there and push prices way up. So you got kind of a double-barreled story with silver, where it wins almost no matter what happens. You know, barring that nuclear war or 1930 style depression, silver is going to be something that goes up in price because of rising demand for a really long time.
You mentioned opening up mines, mines. Are you also in your writing opening up minds, minds, to the to the fact that we need to have at least some diversification into precious metals in our portfolios?
Well, yeah, and you know, that's a story that a lot of people are already coming to. So it's a very easy sell conceptually, because a lot of people are very worried out there about what's happening in the world, and now they're noticing actual inflation in their own personal lives. Everything they buy is going up. So it's a very small step from there, from, oh my God, the price of everything is going up and the world just seems like it's going crazy, to maybe I should have some gold and silver coins here just in case, I'm getting calls from a lot of friends who never expressed any interest in this stuff before. And they want to know how to buy silver. And it's usually silver. Silver is because it's way cheaper. You can buy a lot more silver coins with a few $1,000s than you can gold coins. So that's sort of the entry point for a lot of people. And I think the idea is spreading. And another reason it's spreading is cryptocurrencies. To understand and appreciate something like Bitcoin, you have to understand the fiat currency collapse story, because that's basically the appeal of cryptos is that they have limited supply. Therefore, they're going to hold their value when fiat currencies start to collapse. And from that point, precious metals are very easy to get to. You say, okay, I got some Bitcoin now. What else should I get? Oh, yeah, obviously gold and silver, so there are people coming from a lot of different directions to the precious metals story, which means that there's going to be a lot of money flowing into gold and silver from investors, not just industrial users, but investors. And so you combine those two things and you get an extreme shortage, basically. I mean, we also what happened in the nickel market just lately, where the exchange where nickel was being traded was swamped. Nickel was going up in price too fast, and they just closed down trading and canceled all those trades. So, a lot of people made a lot of money on paper by going long nickel, and those trades were canceled. So now nobody trusts the exchanges anymore, which just makes it that much more important to get your hands on physical metal, so you don't have to deal with these stupid exchanges that might just cancel your trades, even though you were completely right. So
and probably take in your payment as well. So there is a correlation between crypto, the Bitcoins, and precious metals.
Oh yeah, well, cryptos are competition for precious metals on the one hand, but they're also an educational platform for precious metals on the other hand. In other words, yeah, like I said, if you understand Bitcoin and the reason for Bitcoin, you also understand the reason for gold and silver automatically, because their use cases are very similar from an investment standpoint. And since crypto people tend to be fairly young, whereas gold bugs and silver buyers tend to be older, that we're training a lot of millennials in the uses and point of precious metals. That is a really good thing. If cryptos go up in the short run, that probably depresses the price of gold and silver, but it also creates a lot of profits on the crypto side of the ledger, which have to go somewhere. And, if Bitcoin goes to $100,000 a coin and you cash out, you're not going to just leave it in dollars, because not to trust dollars. So you got to put it somewhere else. And you look around and think, oh, gold and silver haven't gone up that much yet. Let me just dump my money there for a while, and that's the thought process that will happen in cryptos if cryptos succeed. So their success is not gold and silver's failure. It's like success delayed for gold and silver if cryptos go up.
But they do work together.
We accept cryptocurrency at BullionMax. So if they have had some success and they do want to turn it into gold, silver, platinum, palladium, anything like that, we make that easy for them at BullionMax.com.
That's a really good business practice, because it saves them having to dump all their crypto profits into dollars, which they don't want to do, and then spend it somehow. If they can go directly to gold from you, that's a nice, clean transition.
Yep. No need to cash out first.
I'm going to get a little personal, John, and I know you write about this stuff. You don't give personal advice, but I want to know what you're doing with your investments, because I'm a nosy guy.
Actually, I should have said this ahead of time. I am talking my book from beginning to end here, because I'm so exposed to gold and silver right now. I'm to the point of it being very unwise. You shouldn't load up on one thing or one concept, because nobody knows the future for sure. And, that one thing can strand you if it goes the other way. You can lose a lot of money. But I have been just stacking for the longest time now. I literally don't know how many silver coins I have, because it's really easy just to grab some, put them away, and then, lose track of the numbers at some point. And on the financial asset side, I have a lot of gold and silver mining stocks.
Mhm.
And then beyond that, I have shorts on the stock market. In other words, long dated puts on the NASDAQ and a handful of companies that look overexposed and overvalued right now. So yeah, I am totally putting my money where my mouth is here. And
You're walking the talk.
oh yeah, in a way that if I showed this to a financial planner, he would probably say, "Okay, first let's get you a good therapist, and then we'll talk about your money afterwards." You know, it's an extreme bet that I have on right now. But the reason for that is that this seems pretty obvious. We are screwing up our financial lives on an absolutely biblical scale. And history says there's no way for that. I mean, barring a giant war, we have the weapons to basically snuff out human life right now. And that would
Yes, we do.
pretty much take care of my investment strategy too. But barring that, there really is no way for this to evolve in any other direction than a currency crisis, which leads to a really big monetary reset in which precious metals thrive. They might not be the center of the next global monetary system, but they will go up in price along the way. And I'm convinced that's a really, really, really high probability scenario, with the other scenarios being things that are too horrible to contemplate, therefore, not worth an investor's time.
Mm-hmm.
So yeah, there it is. I'm definitely involved as much as I can be with the precious metal story.
And I want you to know that earlier in our conversation, you said diversify.
Yeah.
Don't put
Well,
all your eggs in one basket.
diversify. Yeah. I mean, what I was talking about then was diversify within the universe of real assets. In other
Got
words,
it.
things governments can't make more of. So gold and silver mining stocks in that way are our diversification.
Got it. We're gonna,
To most other people, they would be
So,
considered a concentration of assets.
we're going to take a time out and talk to Sean for a moment. When we come back, we're going to do a little game show. Okay, I'm gonna be the guy spinning. You can be Vanna White, Sean, and we're gonna ask. Yes, exactly. We're gonna ask John to describe some words for us in just a couple of moments. Tell us about BullionMax and how BullionMax can help educate people who are on the fence. They can't decide if they should go into metals or not. What can BullionMax do to help that?
our best opportunity to help people do that is to speak with them directly. We do have information on our website, so if they've already read that and they're still just not sure about what they want to do or if they want to do something, the best thing they can do is have a conversation with us or me and just help me understand where they're at. Where is that blockage coming from that's preventing you from doing? Is it a financial barrier? Is it I'm afraid to have this stuff in my house? Is it, what is it exactly? And sometimes just talking through the process of becoming someone who possesses precious metals and will receive them, and they may always be at arm's length or always somewhere nearby. Um, that is probably a more common conversation we have than many others about just getting started. If they're on the fence or I really want to, okay, so I understand you want to. Let's figure out what that roadblock is, and just by talking through it, I'm a 30-year service guy, so I've got pretty good ears. And so I've also heard that I would make a great therapist because I'm a good listener.
Well,
Okay.
you've been listening to me for a long time now, so,
So
and
I
being
think
very helpful.
I think those things are very important to have a set of ears who's going to listen, but is not then going to turn around and try to sell you something right away. You'll buy when you're ready. We're not about pushing you. We're about educating you. And when you're ready, you'll
Terrific.
pull the trigger on it and you'll feel good about it instead of feeling like, something just happened to you. We want to put people on the offense, not on the defense when it comes to purchasing their metals because it's just a much more enjoyable experience. And we're all about that.
Okay.
We want it to be a good thing for our clients and our customers.
All right, Sean, I want you to get ready to be. I'm not sure exactly how this is going to work.
I don't have letters to turn, but
No,
I'm
you don't.
excited for the
Well,
game
you can
here.
play
Just
too.
the
How
answers.
about that? Our guest, of course, is our new friend John Rubino. He is the publisher of DollarCollapse.com. He's also the author of 5 books on the economy and investing. His latest is The Money Bubble, and we've been talking about how the bubbles are going to pop, in John's opinion, and what we can do about that. So, John, I'm going to give you a couple of words and would like you to describe them. How's that?
Okay.
All right. And there are no prizes. I just, no prizes
Not
for
in the
you.
budget.
Yeah,
It's very low
exactly.
budget production. So
All
sorry
right.
about that, John. We should have
Um,
told you.
we talked about this, John and I talked about this before we started our show, and stagflation. Stagflation. What is it, and is it coming?
Okay, stagflation is a word that was made up in the 70s, the 1970s, last time we had this kind of inflation. For an economy in which growth is really slow, that's stagnation, but prices are going up dramatically, that's inflation. So stagflation is the combination of those two words. And it's one of the worst of all possible world scenario for an economy, because your cost of living is rocketing while you're not getting any raises at work because business isn't very good. And that's the kind of environment that leads to regime change around the world. It's different in different places. Here in the US, we get annoyed and frustrated. We'll vote our president out of office when something like that happens. That's what happened to Jimmy Carter after the
Right.
1970s. He lost a landslide to Ronald Reagan. In other parts of the world, you get street riots that end up with, violent takeovers of the government because people are in a developing country, for instance, people are right on the edge. They're just getting by, and then you hit them with slow growth, so they're not getting any raises, and soaring prices for food and gas. And then they have to decide whether to feed their kids or drive to work. Then they take to the streets. So it's very disruptive and destabilizing for basically any kind of a culture to go through a period of stagflation. We're just about there. The economy is supposedly slowing down to a potential recession level in the coming year, and inflation is at double-digit levels now, according to real measures of inflation. So I think people are going to respond to that if it goes on the way they have throughout history, and it's not going to be pretty for the people in charge of these big countries.
Here's another word, or actually, there are 2 words: safe haven.
Okay, a safe haven asset is something you buy as a way of protecting yourself from, a coming storm. In this case, financial. And traditionally, safe haven assets have been things that governments can't make more of. They can make an unlimited number of dollars or treasury bonds or bank stocks. So you don't want to own those in this kind of an environment. But a safe haven today would be gold and silver, of course, because it's precious metals are a form of money that governments can't create more of. And they don't have counterparty risk. That's a crucial concept. That maybe ask me about counterparty risk later. Okay, you can throw that one out. I'll just define it and everything. But besides gold and silver, safe haven assets would be farmland, which God's not making any more farmland. It's always going to produce food, and we're always going to eat. Therefore, it holds its value. And maybe oil wells, things like that, because energy tends to stay valuable throughout the business cycle. And well-chosen real estate, or rental houses in particular, because especially in hard times, people are getting tossed out of their houses because they can't pay their mortgages, but they still have to live somewhere. So they'll rent, which means rental houses actually see rising demand in hard times. So things like that are what protect you from the kind of thing that's coming. And they're today's safe haven assets.
You mentioned our kids and our grandkids. What can we do to protect our assets so that we have something valuable to give or to leave to our children?
Well, you see, it depends on what kind of a time frame that you're talking about and what kind of an environment you're talking about. For the past 50 years, the thing to do would be the traditional, 60% stock, 40% bond portfolio with a little bit of cash, because that's what works during a long credit cycle. Now, that has changed dramatically. That's probably a way to destroy your legacy for your kids if you stay with a plan like that. So you need to shift over to those safe haven assets I was talking about, which, in this case would be precious metals, well-chosen real estate, energy assets, and farmland in particular. So that's what you do for your kids going forward. You put your wealth in things that will hold their value over long periods of time. So when your kids inherit, even if the economy is strange in some way that we're not now predicting, a piece of farmland is still going to be valuable. An energy or, an oil well is still going to produce oil, which will probably still be valuable. So that's how you ensure your kids and your grandkids' financial survival for long periods of time.
I have a 2x6 area where I grow tomatoes every year. Maybe I ought to expand that a little bit into more farmland.
You need a homestead.
I need a homestead.
Yeah, besides some farmland, get some goats and some chickens, and then be food self-sufficient. And then you don't care what happens at the grocery store anymore,
And my wife is always complaining about the prices going up and up and up.
Put her to work out there, she can take care of the goats. Yeah.
So there's the long-term plan. You sell the house now at these high astronomical prices. You travel the country for a while, and then you buy a homestead.
Yes.
Yeah, but who would have to mow the grass? I'm like you, John.
I'd hire it out. I'll hire that out. That's okay.
Got it. As we wrap up, John, give us a State of the Union address, if you will. Okay. Are we okay? Or is there a crisis coming?
We are monumentally not okay. We've been making stupid financial mistakes for, however many years since 1971 it's been. So that would be what, 30, 50 years. And those mistakes are now coming home to roost. We've built up these gigantic debt levels at basically every sector of society is over indebted now and over leveraged. And it all looks like it's going to blow up at once now. We're going to see credit crises all over the world, currency crises in which, country currencies just vaporize. And whereas in the past, financial crises used to be country specific or sector specific. Now it's everywhere. Every country, just about, with the possible exception of Switzerland, is going to have some kind of a big financial crisis, and every currency, with the possible exception of the Swiss franc, is going to be hit very hard. So yeah, we're not okay, and there's no way to fix this politically. Your vote does not matter, other than as a way of virtue signaling right now, because we have institutional momentum built in where we're not going to cut our deficits. We're not going to stop spending insane amounts on our military. We're not going to stop creating huge amounts of new currency and just dumping it into the market. All that stuff is going to continue until the market stops it. And there's a decent chance that happens pretty soon, that this coming crisis that will come when the Fed raises interest rates to the point where it breaks the financial system again, that this will be the last one of this era. So yeah, we're not okay. We might be okay at the end where we rebuild something useful from the rubble, but we have to get through all that before the rebuilding the useful thing part of the story starts.
Can Sean and I bring our families and move to your homestead?
Yeah, we do need some cheap labor, as we talked about.
That's us.
So, yeah, okay. Come on out.
I guess I'm mowing. It's on me now.
Yeah. Well, maybe we'll get one of those tractor things we can ride on. Listen, John, thank you very much. If you want information on John, you can check out dollarcollapse.com. That's dollarcollapse.com. And I also invite you to take a look at the BullionMax website. Lots of information there. If you make a call, you'll probably end up one way or another speaking with Sean Reynolds, the customer service manager. And you can learn by asking questions, because that's what people need to do right now to preserve wealth. As we wrap up, John, I've really enjoyed this time with you. Will you come back sometime?
Thanks.
Soon?
I'd like that.
Yeah, we like that too. I'm Mark Allen for BullionMax and for Sean Reynolds. We'll see you next time. Bye-bye for now.